Paolo, good to see you. How you doing? How you been? First one in, as always. Pure, good to see you. How you doing? How you been? Well, XRP, good to see you as well. How you doing? Evening. Mike, good to see you, brother. How you doing? How you been? Manny, evening. Good to see you as well. How you doing? Come on, good to see you, brother. How you doing? How you been? Well, Miles and CMF, Scott, good to see you as well, brother. How you doing? Hey, Miles T, good to see you as well. How you doing? Even Miles and CMF, Jason, good to see you as well. How you doing? How you been? Morning, Miles and CMF, Shelly, good to see you as well. Morning, how you doing? How you been? Good evening, Miles, and the rest of the family. Funky brother, good to see you as well. How you doing? How's things? Good evening, Miles. How are you today? I'm doing great, SP. Good to see you as well. How's things with you? Good evening, Miles. Hope you're ready for a nice, relaxing weekend. For me, it's going to be a different type of weekend, and I'll explain why towards the end of the live. Hi, Miles and CMF and group. How are you doing today, boss? I'm doing great, Carlos. Good to see you as well. How you doing? Hi, Miles. Davos. Good to see you as well. How you doing? Share the live. Let's go, Scott. Absolutely facts. So let's do intro, disclaimer, and what we're going to go through on tonight's live. Even Miles and CMF talk. Good to see you as well. How you doing? I hope everyone's tuned in for this live because on Sunday, I might be doing some sort of a work travel to Spain and then coming back on Tuesday latest. So it's going to be a very quick work essentially thing. Going on Sunday to Spain, coming back on Tuesday, most likely Tuesday morning or Tuesday afternoon and so on. So I hope everyone essentially is tuned in for tonight's live because we might not be able to do Monday's live. Tuesday we might be able to do it because I'll come back in the morning. But if not, I'll let everyone know. But I hope everyone's tuned in for tonight's live. But I'll update everyone in case if I'm not going essentially to Spain on Sunday, coming back on Tuesday. Giving us a creepy news for the Halloween. Yes, definitely. It's also Halloween as well. Happy Halloween, everyone. What's my crypto going to help me retire, Miles? When's my crypto going to help me retire, Miles? T, give it some time. We're getting there. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live, which means if you do have any questions, put it down inside the comment section. More than happy to help you out. And also, this is episode 398 of the CMF Live. And on tonight's live, we're going to be talking about essentially the Fed's movements going forward. We're going to talk about essentially some partnership announcements, also some Ripple news to go towards the end of the live, and some other news regarding corporate stable coins and so on. Before we go through any of the news topics, and the first one being the Fed, let's go to the comment section first, and then we go straight into the first news. Good evening, Miles. How are you doing? I'm doing great, Callie. Good to see you. How are you doing? Hello, CMF and Miles. Hope you had a good day. Let's go, Scott. I did. Happy everyone. Let's go, Jason. Happy Halloween. Scott, let's go. Government shutdown seems to be taking its toll as some U.S. airports looking to ground planes now. Well, that should put pressure on the Democrats to start voting to open the government back up. Congratulations on program 398, Miles. Let's go, Scott. Thank you so much. You know, there was a video essentially released, resurfaced. Sorry, not released. There was a video that resurfaced regarding Barack Obama, where he made a very interesting speech once, where he said, if the Republicans don't like what we have, what we're doing, what we're achieving, then by all means, they can essentially be voted in and take our essentially place, and they can do whatever they want essentially. But since, like, the Democratic Party got voted in, Barack Obama is now essentially leadership. He said that essentially this was done by an election, and he doesn't understand why the Republican Party would want to shut down the government. Is what Barack Obama said when he was president. When Barack Obama was president, he actually went on stage and said he doesn't understand, why the Republicans want to shut down the government, because they don't like his policies. And that Barack was chosen democratically. He was voted democratically, which he was. And that's how he became president. He said if the Republicans don't like it, they can win and then do what they want to do. But shutting down the government is not the solution. You fast forward to 2025, and the Democrats are trying to shut down the governments. The tables have turned. Back then, the Republicans wanted to shut the government down because they didn't agree with Barack Obama's policies. Now, you fast forward to 2025, it's the other way around. The Democrats want to shut the government down. But it's interesting on what Barack Obama said regarding, shutting the government down is not the solution. And if you don't agree with us, then win. The Republicans can win and do what they want to do. But since the Democrats have won, shutting down the government is not the solution. But that's how it's playing out right now. The Democrats don't like that Trump has won, and they're trying to shut it down. The tables have definitely turned, I'll be honest. Now, the Fed is what we talk about first on tonight's live. And by the way, I just want to say thank you so much to everybody who has liked and retweeted this live right off the bat, joining into the live show. Thanks so much to everybody who smashed the like buttons, smashed the retweet buttons, and thank you so much to everyone on YouTube who's watching right now who's also smashed the like button. And thanks so much to everyone who's put comments outside the live also. If you haven't done that, CMF members, take a few seconds just to like and retweet this live show on X. And if you're watching us on YouTube, just drop a like. Now, the Fed. Jerome Powell, essentially December rate cuts, faces challenges. The Federal Reserve, Jerome Powell, has indicated that the further rate cuts, particularly in December, would be essentially challenging unless inflation significantly declines, following the October 2025 rate cuts of the 25 basis point cuts. Now, Jerome Powell's statements highlights ongoing economic constraints impacting market expectations and potentially influencing cryptocurrency essentially valuations as risk assets may react to the Fed's monetary policy adjustments. The Federal Reserve, led by the Chairman Jerome Powell, cut rates by 25 basis points at essentially the October FOMC meeting. Powell essentially retreated that further cuts, such in December, would be challenging without a decrease in essentially inflation happening. Jerome Powell emphasized that the limitations on monetary policies due to the persistent inflation and no direct cause essentially confirmed his statements about December's difficulties, highlighting his caution in his signaling future essentially actions. The decision impacts financial industries with no large liquidity programs linked to the specific rate cuts. The Fed essentially seized quantum tightening to stabilize the Treasury and the MBS essentially markets beginning December 1st. Affected assets such as Bitcoin and Ethereum often see increased bids following US rate cuts. Although no immediate essential exchange data shows extraordinary TVL changes, historical trends do suggest potential for future rallies. And historically, rate cuts have led to rallies in BTC and ETH. The exact impact of Powell's remarks remains to be seen, with no immediate changes in TVL or crypto market responses recorded. Market observers expect possible financial shifts in inflation eases, allowing the Fed for essentially more flexibility. Past events such as the crypto rise essentially after dovish Fed moves. However, data availability is limited for current impact analysis. The issue is, due to this government shutdown, Jerome Powell needs more data, and he can't get the data he needs to make it much more, vital essentially decision on what's going to be happening next regarding going forward. Are we expecting more rate cuts? Are we expecting bigger rate cuts, or none whatsoever? So the Fed is stuck at some sort of a limbo stage right now. They don't know what to do moving forward because they don't have the data that they need. Now, moving on essentially from the Fed to corporate stablecoins. There is a new frenzy going around right now inside the crypto space, where too many corporations are coming forward and creating stablecoins like it's novelty items. Now, the idea that institutions want to be more involved inside the blockchain space, incredible, amazing. Everybody loves the idea. Everybody inside the crypto space loves the idea about institutions coming in because they bring their big wallets also with them. However, but the idea of every institution thinking about creating some sort of a stablecoin, it just essentially defeats the purpose of a stablecoin, because instead it it will just create massive confusion on which stablecoins to hold. Essentially, the race to develop stablecoin infrastructure is heating up across Wall Street and corporate America. Citigroup is moving ahead with plans to expand its stablecoin payment capabilities, aimed at essentially growing speculations that major financial institutions are exploring stablecoin essential initiatives following the passage of the US Genius Act, which happened a while ago. The momentum extends beyond also banks. The Western Union announced that plans to build a stablecoin payment network on Solana, which essentially we talked about, underscoring how traditional payment providers are embracing blockchain for faster and cheaper cross-border transactions. Meanwhile, the Bitcoin essentially mining landscape is also becoming increasingly competitive, with smaller operators rapidly closing the gap on industry leaders. And in digital lending, essentially Ledden reported more than $1 billion in Bitcoin-backed loans, essentially this year, evidence that investors are increasingly opting to borrow against their Bitcoin holdings rather than sell them, which is good. Citigroup is also eyeing stablecoin payments as the next major group driver, partnering with essentially crypto exchanges Coinbase to expand its digital asset capabilities, which we talked about in past also. The initiative initially focuses on making it easier for clients to move crypto, essentially to move between crypto and fiat currencies. Citi's head of payments said that this move reflects growing client demand for faster, more programmable payment options. The bank is also exploring solutions that enable on-chain stablecoin payments for our clients, the Sen said. The announcement essentially comes roughly a month after Citi projected that the stablecoin market could surge up to $4 trillion by 2030, up from about $315 billion today. Following the passage of the US Genius Act, several major essentially Wall Street banks, including JP Morgan and Bank of America, are reportedly exploring their own stablecoin initiatives also. Global remittances giant Western Union is developing a new digital asset settlement system built on Solana, as we talked about. During its third quarter earnings call, Western Union announced plans to launch an ecosystem that includes the US dollar payment token USDPT, and a digital asset network developed in partnership with Anchorage Digital Bank, a federally chartered crypto bank that essentially provides custody and infrastructure services. USDP is expected to debut in the first half of 2026 with partnerships across several crypto exchanges to enhance its accessibility and liquidity. We looked at alternatives and came to the conclusion that essentially Solana was the right choice, said Western Union's CEO. The Bitcoin mining industry is also growing increasingly competitive in the post-halving era, as new waves of essentially mid-tier companies rapidly gains market share and challenges established essentially leaders. According to data from the Miner Mag, smaller publicly listed miners, including Cypher Mining, BitDeer, and Hive Digital, have significantly boosted their essentially realized hash rates after years of heavy infrastructure investments. These companies are now narrowing the gap with the top players such as Mara Holdings, CleanSpark, and Congo. Their essentially ascent highlights how the middle tier public miners, once trailing far behind, has rapidly scaled production since 2024 halving. The Miner Mag wrote in a recent newsletter some of these companies, notably Hive Digital, and also diversifying beyond Bitcoin mining into artificial intelligence and high-performance computing workloads, signaling a broader shift within the industry. In my point of view, the only company that so far has got the right idea out of all the institutions coming inside the crypto space, the one that's got the right idea is BNY Mellon. Because BNY Mellon didn't follow the trend of creating stablecoin like everybody else. They decided to be some sort of a backbone to offer services for the crypto space instead. Whereas everybody else around them thought, let's create a stablecoin, which in hindsight, yes, it seems, incredible. More essentially institutions, behemoths entering the crypto space. But the reality of it is, do we really need 50 different types of a USDT, essentially of a US dollar stablecoin? No. Do we need 50 versions of the euro stablecoin? No. Or 50 versions of the British pounds? No. You get the picture. But it's great to see they're all enthusiastic about the crypto space. From where they were before, where essentially they saw the crypto space as a Ponzi scheme, to now coming forward to want to be involved in some sort of way. But BNY Mellon, in my point of view, has got the right idea. Create services for the crypto space. Don't just create a stablecoin. Now, crypto enthusiasts react strongly to the European Central Bank's digital euro project. And the progress essentially is what we're going to go through on tonight's live. But before we go through that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, put it down in the comment section. I'm more than happy to help you out. So let's see what's happening inside the comment section first before we go through the next news on tonight's live. Let's see where we're at. Mike, thank you so much for the 25 Canadian dollars. Absolutely amazing, brother. Thank you so much. What's your thoughts on Keter, and do you think that's a good project? I don't know what their recent developments are. I don't know what their recent partnerships are, to be fairly honest. I can take a look into it and get back to you if that's not an issue. Direct message me. I'll take a look into it, get back to you. Let's go, Carlos. Mike, thank you so much, brother, honestly, for the donation. Absolutely amazing. Hi, Miles of CMF. Stormy, good to see you as well. How you doing? How you been? Now, crypto enthusiasts. Some are shocked, some are happy, and some just standing in the middle regarding the European Central Bank's digital euro plan. So here it is. The cryptocurrency community has expressed strong disapproval towards essentially the European Central Bank's recent decision to move forward with its digital euro project. The European Central Bank has updated its roadmap and released a progress report for the digital euro project. The report indicates that the pilot phase of the digital euros will begin in 2027, with the first digital euros issued in 2029, subject to a legal framework being put into place. The bank's announcement that is essentially transitioning the project to its next phases has essentially a slew of negative responses from the crypto community and seemingly worried European citizens because it's a CBDC. The main concern among numerous responses appears to be the disagreement with the European Central Bank's claim that a digital euros would safeguard users' privacy. The European Central Bank has stated that a digital euros would preserve Europeans' freedom of choice and privacy and strengthen our sovereignty and resilience. In a related video, there's so much I could say about that, honestly, to be fairly honest. In a related video, the bank's essentially president, Christian Lagarde, linked the project to the EU defense and sovereignty, asserting that the digital euros embodies the capacity of Europe to defend itself and to transact with a currency of its own. Supporters of the central bank digital currency CBDC, like the European Central Bank, argue that the digital euros is crucial to modernize the payment system, which is true, 1,000,000% true. Because 90% of centralized banks are in CBDCs. It's nothing that anybody can stop. Honestly, a lot of people in this world believe that they can stop digital payments, stop digital IDs, stop social credit systems from happening, stop 15-minute cities from happening. And unfortunately, as much as you want that to be true, it isn't. And that's the reality. And this is why I say the best thing you can do is prepare, essentially, honestly, prepare for a CBDC world rather than holding placards and trying to protest with funny slogans, because that achieves nothing for your future. Because they're not listening, they don't want to listen, they have a plan and they're going to move forward with it, whether you like it or not. That's just the world we live in. Regarding this, essentially, and ensure essentially citizens will always have access to safe pan-European forms of central bank digital currency, digital cash, alongside physical banknotes. Also, the idea that banknotes, in other words, fiat, is still going to exist, cash is still going to exist. Yes, it will, alongside CBDCs, and eventually cash will just disappear. And everything will become digital. And it all started from COVID. When everybody was told to stay in their houses because you're ill, banks started closing down one by one, so the cash points. And when COVID ended, Apple Pay, Samsung Pay, Google Pay all started skyrocketing. Everybody was using digital payments because cash carries germs. And also a lot of places stopped accepting cash. But they're still telling people, if we go into a digital world, a CBDC world or a crypto world or so on, cash will still exist. Even though they're fading cash out since COVID, it's still somehow going to exist. One user, that was sarcasm, if anybody didn't essentially pick that one up. One user expressed significant concerns about privacy, financial sovereignty, and the potential for increased central control over individual transactions. The risk of data misuse and the erosion of personal freedoms cannot be ignored, they added, which I honestly understand. Yet, it's nothing you can stop or do anything about. Many other posts echoed these concerns about the potential for CBDCs to be used as government surveillance tools, while several users questioned the democratic, essentially, process behind the project. Despite the prominently negative sentiments, it's worth noting that the European Central Bank post announcing the launch of a digital euro's next phase has not been ratioed. It has 372 likes against 327 comments, and at the time the article's publication. Obviously has a lot more likes and a lot more comments now. But honestly, I said a long time ago, 3 years ago, I said on the CMF live show, 3 years ago, I said, if you want to see where your country is headed, look at China. It's the only country that at that time had a CBDC, a social credit system, and somewhat of a 15-minute city concept. And you fast forward to essentially 2025, where 98% of centralized banks on CBDC. Everybody's thinking about CBDCs. Everybody's thinking about social credit systems. Everybody's thinking about digital IDs. It's something that's been introduced in the UK. And a million people signed to not have a digital ID in the UK. And our Prime Minister in the UK looked at it and said, nah, they couldn't care less. Because they don't care. The faster people realize that they don't care, that these politicians that you vote for, or sometimes get elected because you didn't even vote for them, like Christian Lagarde of the European Central Bank, nobody voted for her. Nobody voted for the Fed chairman, to be fairly honest. There are people that we don't vote for that don't listen to us, and there are people that we vote for that still don't listen to us. The faster you realize that, the better it is. Because that means then you can start preparing for your family, for yourself. In other words, if you can't beat them, join them. Prepare for a digital future is the much more logical solution than trying to stand up to somebody that just doesn't want to listen to you and will still move forward, whether you like it or not. Now, Stellar is what we're going to talk about next on tonight's live. Stellar and Chainlink, essentially. Stellar taps Chainlink solutions to power the next-gen DeFi applications. It's been a while since we've talked about XLM on this live show, to be fairly honest. Payments-focused platform, essentially blockchain platform, Stellar plans to leverage a Coral Network Chainlink solutions, including data standards and cross-chain interoperability protocol to boost decentralized finance traction on the blockchain network. Stellar will join the Chainlink Scale program and integrate Chainlink's also key solutions, including cross-chain interoperability protocol, data feeds, and data streams, according to a press release. The integration will see developers and institutions tap into trusted data and cross-chain interoperability as they build decentralized applications on XLM and Chainlink. Stellar hopes to expand its ecosystem across the burgeoning real-world assets and decentralized financial markets. The move to collaborate comes as tokenized treasuries, real-world asset payments, and overall DeFi resurgence highlights the industry's growing traction aimed regulatory shifts. With the decision to integrate CCIP data feeds and data streams, Stellar is enabling its ecosystem to access the secure and reliable infrastructure needed to support institutional-grade tokenization and seamless cross-chain applications, said Jonan Eid, the Chief Business Officer at Chainlink Labs. This collaboration significantly accelerates Stellar's ability to scale to meet the demands of unified on-chain financial systems. Specific benefits that come to XLM as results of this integration include battle-tested security via CCIP consensus layer. This solution, powered by Chainlink Decentralized Coral Network, has helped secure over $100 billion in total volume locked across essentially the DeFi CCIP gives, and it gives developers production-ready interoperability. Developers and institutions can also tap into the token agnostic transfers and programmable token transfers, among others. Chainlink's data standards will unlock DeFi on the XLM network. Once the integration is complete, Stellar will be one step closer to a unified on-chain financial system where real-world assets and DeFi coexist seamlessly, said Raj, the Chief Business Officer at Stellar Development Foundation. XLM and Link tokens saw slight gains today based on this news. Great news for XLM, great news for Chainlink. Now, before we go through the next news, it's banking news, which is very relatable to cryptocurrencies. Let's go inside the comment section first, before we go through the next news. Let's see where we're at. We were here, I think. Yeah. Hello, Miles and CMF family. I hope you're all fine. Let's go for facts news. I read some news about ZK Power. Carl, good to see you. How you doing? Hi, Miles and family. Susie, good to see you. How you doing? No worries. Thanks, Miles. No problem, Dasso. Soz, I'm late. We'll catch up with replay. Hi there, CMF. Joe, good to see you. How you doing? But why did the European Central Bank delay it so much? The only reason they delayed it so much is because they have to be 1 billion% sure that the system they're going to be running is going to be foolproof. But they could release it a little bit sooner as well, to be fairly honest. Now, Catalan Long. There's this news going around inside the crypto space. Some are saying it's bad news for Ripple. And I see it a different way. Catalan Long's crypto bank loses its appeal over a Fed master account. So Custodia Bank, a long time ago, I shared on this slide, Custodia Bank was one of the first blockchain-friendly banks that decided to apply for a Fed master account a long time ago. And it was rejected. They appealed, and it was rejected today. Some are seeing it as bad news that the Fed doesn't want to work with essentially blockchain-friendly banks. I see it as good news. And I'll tell you why after I read it out to you. A US essentially court has ruled against Custodia Bank, the crypto-friendly institution founded essentially by Catalan Long, siding essentially with the Federal Reserve and a lower court decision. In a Friday judgment in the US Court of Appeals for the 10th Circuit, 3 circuit judges affirmed a lower court ruling in the District of Wyoming. The appeal filed in April 2024 after the court ruled against granting Custodia US Federal Reserve master accounts, with the latest setback since the crypto-friendly banks first submitted its application in October 2020. This case comes clothed in 21st century terms: cryptocurrency, digital assets, instant wire transfers, and master accounts, said the Friday judgment. But there is nothing new about this issue. Courts have probed the legality of our nation's central banks and interpreted the relevant status since the foundings. Being approved for a Fed master account would have granted Custodia Bank access to payments networks used by the US government and authorized financial institutions. And that's the part that's quite interesting for me. So I read this news to you about a year ago on this live, where I shared Custodia Bank is applying for a Fed master account, trying to work with other banks and get access to the Fed. And you fast forward to today, where essentially they were completely rejected. The reason why I see it as good news rather than bad news is because Custodia Bank won't be the first one to have access to a Fed master account as a blockchain firm, as a blockchain bank. Because the other ones that have applied are Ripple, Circle, and Paxos. And I really want Ripple to get the Fed master account first, before Custodia Bank gets it, before Paxos gets it, or before even Circle gets it. So the idea that Custodia Bank was rejected, as bad as it may seem, the idea that Custodia Bank was rejected doesn't upset me in any sort of a way, because I want Ripple to get the Fed master account before Custodia Bank. After Custodia initially essentially requested access through the Federal Reserve Bank of Kansas City, the Fed rejected the bank's application in 2023. Also, to be fair to Custodia Bank, it was a long time ago for them, where essentially they won the era of Biden's administration, which was the worst era to file any application. The Fed rejected the bank's application back in 2023 for risk and were likely to be inconsistent with safe and sound banking practices. With essentially, due to its focus on digital assets, Custodia filed a lawsuit back in 2022 before the rejection, alleging an unlawful delay by the Fed in processing its application. In a statement essentially posted to X after the judgment was posted to the public docket, Custodia said it was actively considering petitioning the court for essentially rehearing. While we are hoping for a win at the 10th Circuit Court today, which they didn't get the win they wanted to, we received the next big thing, a strong dissent, a raised serious constitutional question about the Federal Reserve, and was written by a judge sitting by designation on the panel of a similar case on the 9th Circuit. Aventi was one of the first blockchain banks also established in Wyoming by Long under a friendly state-level regulatory environment. The company rebranded to Custodia back in 2022. Cointelegraph reached out to Long for a comment but have not received a response at the time of publication. So, Custodial bank applies back in 2023, essentially back in 2020, applies for some sort of a Fed master account. All the way up until now, with all the back and forward, they've been rejected. Again, I don't see it as a negative news. And to be fair, as I said, they applied a long time ago, which was the worst time to file for a bank Fed master account. Under Biden's administration, we couldn't get ETFs for the crypto space. We couldn't even get a regulation for the crypto space, never mind filing for a Fed master account. So, you know, bad idea to file in that time. But if you fast forward to today, things have definitely changed. Things will be a lot more smoother going forward, essentially, for Ripple, Circle, and Paxos getting their Fed master. Well, Ripple is the only one that wants a Fed master account. Circle and Paxos just want some sort of a banking charter license. Ripple's the only one going for a Fed master account. But yeah, I'm not sad about that news in any sort of way. People were on X. A lot of people, you know, essentially were sad about that news on X and thinking that, you know, this is going to be bad for Ripple. No, not in reality at all, whatsoever. Now, quantum computing. One of the biggest subjects inside the crypto space. One that certain crypto projects fear when they hear the words quantum computing, and other crypto projects couldn't care less because it doesn't affect them whatsoever. Quantum threat to Bitcoin is still years away, says Borderless Capital partner. Although still in its essentially infancy, quantum computing could pose a threat to Bitcoin and other proof-of-work algorithms in the near future. According to Emmett, a partner essentially at venture capital firm Borderless Capital, when asked what trends essentially Borderless Capital was following, Mira, speaking to Cointelegraph at the Global Blockchain Congress in Dubai, essentially today, said the company was diving deep into quantum computing and looking at how companies are developing quantum-resistant technology. Mira said quantum computing will take until the end of a decade to develop. Still, he said people tend to underestimate the rapid evolution of technology. In other words, it could be a lot more less than a decade. In other words, quantum computing could just be a few years away, not a decade away. Given the recent advancements, which essentially have happened in chip technology, in computing tech, and in the power of doing computing in a decentralized way, I'll be very honest, Google is getting very close day by day regarding their quantum computing chips. So is Microsoft. So is the firms out of Europe, and China is getting closer day by day as well. So is Russia, so is the US, so is Canada, so is the UK. The list goes on. Given the recent essentially advancements which have happened in chip technology, in quantum tech, and in the power of doing essentially computing in a decentralized way, is essentially definitely a problem, if not imminent, in the very near future. Quantum computing harnesses the principles of quantum physics to process information at speeds far beyond today's essentially machines. While the technology is still emerging, it could eventually break the encryption protecting cryptocurrencies and other sensitive data, pushing developers to create new post-quantum security standards, which is great. But obviously there are issues. Charles Edwards, the founder of Quantum Bitcoin and Digital Asset Fund, said the situation is far more urgent and argues that the industry must employ solutions as soon as possible before it's too late. He posted on X, if Bitcoin doesn't solve quantum in the next year, gold will keep outperforming it forever. It is an emergency, and we need to choose the solution next year. In other words, they need to come up with a solution on how to protect the Bitcoin from quantum computing next year, or Bitcoin is pretty much doomed going forward, is what his words are. Murr and Edwards aren't the only ones concerned about quantum computing. In July, this is what essentially this gets very, very interesting. So in July, Sui, which everybody's very familiar with, that crypto project, Sui Research unveiled a new cryptographic framework designed to safeguard blockchains from quantum computing threats, which sounds, in theory, amazing. Sui research team figures out a way how to protect blockchain from quantum computing. Amazing. Not really. Also, just to put in the perspective, without the need for a hard fork, new addresses, or a key reset, which sounds even better. However, but while the new solution works with SUI, Solana, NEAR, Cosmos, XRP, XLM, XDC, HBAR, AVAX, all of these projects can use the method SUI's research team said on how to protect their chains going forward from quantum computing. So where's the bad part? Well, according to SUI's research team, it doesn't solve the problem for Bitcoin or Ethereum. The only two projects that are very, very, very still vulnerable to quantum computing, it used to be only Bitcoin, but now it's also Ethereum. And this is according to SUI's own essentially research team on how to protect chains going forward, because too many countries are getting very close to creating some sort of a quantum computing chip. I mean, we've all seen the Google updates, and every time Google comes out and says we're getting one step closer, their stocks are going higher in price. The Willow chip, if I'm not mistaken, is what it's called. And according to SUI's research team, and also according to the SEC, Bitcoin is very vulnerable as well. Even the SEC's research team came out once and said that, you know, Bitcoin is vulnerable in a digital world. These are times where it's not so bad when Ripple is standing behind the XRP ledger, or the AVAX Foundation is standing behind AVAX, or Stellar's Foundation standing behind Stellar, or Chainlink's Foundation standing behind Chainlink, or SUI's. Essentially you get the picture. Whereas Bitcoin, who's standing behind it? The people that run the show collectively, which is going to be difficult to get them all to agree on anything. Same goes for Ethereum. Meanwhile, the US government is reportedly considering investing also in quantum computing to protect the national security interest. An October report from Bloomberg said that the US Department of Commerce may allocate funds to tech to be competitive with China. So not only is essentially Microsoft, NVIDIA, essentially AMD, essentially, I mean, the list of tech companies globally trying to build a quantum computing chip globally is huge on a worldwide basis. But also governments are funding these tech firms even further so they can get closer to quantum computing. Because now it's a race. Who gets there first? China, the US, Japan, Canada, the UK, the EU, which makes it even worse for Bitcoin and Ethereum, that not only are these tech firms rushing to see who gets there first so their stocks could go higher in price, but governments are also funding these tech companies even more. Governments are also funding themselves to get to quantum computing. So they're rapidly trying to reach quantum computing on one side of the spectrum, while on the other side of the spectrum, Bitcoin and Ethereum get more vulnerable day by day. Whereas the other blockchain projects that have a foundation behind them are not vulnerable, because those foundations are going to be looking after them. Whereas the other two, it's not looking good. Now, on the topic of the US government, what we're going to talk about next is the US Treasury of, essentially, the US Treasury and Singapore. Before we talk about that, let's go inside the comment section first. As I previously, this is live, which means if you do have any questions or comments, go for it inside the comment section. I'm more than happy to help you out. So let's see where we're at inside the comment section. We were at here. Mouse, any knowledge on Mocha network? No, you could direct message our article to get back to you, no problem. Hi, Miles, CMF. George, good to see you. How you doing? Miles, what about the Zig chain? And I don't know, I could take a look into it and get back to you. Ripple developed ZK Power system to manage the privacy layer on the XRP ledger. It manages the private transactions process from the construction of secure digital circuits to final verification. ZK Power also handles the management of cryptographic keys, protecting each network's operation. Did you talk, which is true, yes. Is it worth researching World Liberty Financial tokens, seeing that Trumps are heavily invested in it, or should not be touched with a poll? I wouldn't touch it with a 10-foot pole. Did you talk about essentially Kita? No, I haven't talked about Kita. Direct message. I'll look into it, see what their recent partnerships are, and get back to you, Scott. No problem. I'm keeping my own XLP. Let's go, Scott. Yeah, regarding World Liberty Financial, I mean, not much against it in any sort of a way. And as everyone knows, I stand with Trump regarding fixing America. It's just that I don't like the idea of crypto projects associated with people. I don't like the idea of any crypto project associated with, mainly associated with a politician or a celebrity or an athlete. It's just a big no, warning signs everywhere. I'm never touching any crypto project associated with any athletes or celebrities or politicians, no matter who it may be. Not interested. But that's just my point of view. Now, but other crypto projects regarding the foundation they're building, regulations, licensings, what they're trying to achieve in their own sectors, yes. But the other side, athletes, essentially celebrities, politicians, not touching that project in any sort of way. Now, never have, never will. US Treasury and Singapore discuss the adoption of stablecoins. US Treasury Secretary Scott Bessent and Singapore's Prime Minister Lawrence Wong discussed stablecoins adoption in a key meeting on October 13th. So on October essentially 31st, today in other words, 2025, underlying increasing US and Asia digital asset engagements in stablecoins and the digital world. This meeting highlights a significant regulatory development in stablecoins oversight with potential implications for digital asset markets with no immediate impacts on price or trading volumes are evident so far because it's just discussions. The dialogue between the US Treasury Scott Bessent and Singapore's Lawrence Wong represents a strategic approach to addressing the future of stablecoins between these two nations. Both sides emphasize regulatory oversight in managing essentially these digital assets, crucial for mitigating the systematic risk. The meetings highlights a shift essentially in US and Asia digital policy engagements focused on stablecoins. Market reaction is also muted essentially as of now, given the meeting's regulatory discussions and natures. Key figures like Bessent essentially and Wong have not issued detailed public statements. The market's focus essentially remains on significant regulatory developments without immediate impacts on stablecoins like USDT, USDC, or RLUSD, and so on. Janet L. Yellen, Treasury Secretary, U.S. essentially Treasury, stablecoins that are well designed and subject to appropriate oversight have the potential to support beneficial payment options, but the absence of appropriate oversight presents risk to users and the broader system, said the U.S. Treasury in a press release. Insights also essentially from research teams highlight the possible outcomes of increased regulatory focus on financial stability and digital technologies. In long-term integrations, emphasis on stablecoin security could pave the way for more secure and widely accepted digital transactions globally. So Singapore, the US, coming together, discussing the idea of stablecoins, discussing the idea of a digital future is actually a brilliant thing to watch. Now, Venezuela. A country that's on the news quite often now due to the US and Venezuela not being on the same page, and that the US wants to take over essentially regarding Venezuela's situation. And a lot of people don't know the real reason why the US wants to do this. A lot of people are just trying to say that the US is a warmonger in this scenario, and that even the president, if I'm not mistaken, of Venezuela decided to step down only if the US doesn't attack them. That's how much he is scared of the US attacking his country. Also, to be fairly honest, the president of Venezuela is an absolute waste of space, just to be fairly honest. Waste of oxygen, to be even more essentially accurate on that matter. But because the way he has treated his own citizens for the longest time is just horrific. Now, the reason why the US essentially wants to, take over the Venezuelan situation, the short version of it is that Iran and China use Venezuela as some sort of a money laundering pot, and the US wants to end that. But there are obviously other benefits because Venezuela has essentially got an immense amount of essentially energy, which the US could use for their benefits as well. So there are multiple benefits with the US going into Venezuela, obviously ending the whole cartel situation, and stopping Iran and China from expanding in Venezuela, using it of some sort of a money pot laundering situation, and also using Venezuela's energy. So there's many reasons why the essentially US wants to do this. Now, Because of all of this, Venezuela overnight decided it wants to go digital. Venezuela integrates Bitcoin into its national banking network. Venezuela plans to integrate Bitcoin and stablecoins into its national banking network by December 2025, led by Consensus, a major financial infrastructure provider. That company is definitely going to be looked into by the US. This initiative signals potential shifts in the country's financial landscape, aimed at hyperinflation, offering regulated crypto services through traditional banks. Venezuela is integrating Bitcoin and stablecoins, notably USDT. The reason why Venezuela is using USDT for this is because it's easier for them to wash clothes into its national banking network by December 2025. This integration aims to stabilize economic, essentially, challenges by offering digital assets through regulated banking channels. Consensus, a major player in Venezuela's financial infrastructure, is spearheading the initiative under the leadership of Rodolphe. He stated that the banks can soon offer stablecoin services with proper regulations to address hedging needs. People in Venezuela are using stablecoins for hedging, and now banks will be able to offer these services with proper regulations, which means we could be expecting quite a bit of liquidity, not overnight, but quite a bit of liquidity entering the markets, because the amount of money that's going to be entering the markets is obviously going to be all the money the Venezuelans, not the people, let's be honest, the higher up people, not the retail section, the higher up people want to hide and want to transact in. So we could be expecting quite a bit of liquidity around December time from Venezuela, depending on how much money they're planning on washing through before they get dismantled by the US government. This move is expected to impact Venezuela's financial landscape, potentially increasing essentially regulated stablecoin deposits. The initiative aims to shift transactions from informal peer-to-peer platforms to regulated banking facilities, improving liquidity and financial oversight. This gives USDT and Tether once again a horrible image of a company. Economically, it addresses hyperinflation issues, while essentially socially, it aims to attract investments into Venezuelan crypto ecosystem. The potential increase in Bitcoin and stablecoin flows may boost banking sectors actively and offer new financial services. Unlike El Salvador's 2021 move, Venezuela essentially uses banking intermediaries to implement Bitcoin usage. This approach might provide a blueprint for inflation-hit economies looking to combine traditional banking with cryptocurrency advantages. By leveraging Venezuela's banking network, the integration could set the stage for further technological investments and innovations in the financial sector. And historical trends do suggest that similar integrations lead to increased usage, but require careful regulatory management. That is essentially the only reason Venezuela is going towards cryptocurrencies right now, out of panic, is because they're about to be obliterated by the US government. And before that happens, Venezuela wants to push all of its money into crypto. They're saying we're doing this because we care about the retail section, is what the Venezuelan president said. He's an absolute moron. The Venezuelan president has starved his own citizens for the longest time. Their currency is pretty much worth nothing. It's so worthless. Using the Venezuelan currency as toilet paper is an insult to toilet paper, to be fairly honest. Honestly, using the Venezuelan cash as toilet paper is an insult to toilet paper. That's how useless the Venezuelan currency is. And that's because their president couldn't care less about their people. He couldn't care less about the retail section since the dawn of time. So honestly, whatever happens to him during this American invasion of Venezuela, he deserves it. Whatever happens to him, he honestly deserves it. Because the way he treated his own citizens all these years, he deserves whatever happens to him. And for him to say, I'll step down so the US doesn't attack us, what a coward. He just wants to walk away from everything he's done. All the pain he's inflicted on his own people, he just wants to walk away from it. Honestly, he deserves anything that essentially gets, whatever the Americans decide to do with him, he deserves it. But he is planning to push essentially quite a lot of liquidity into the crypto space. That's something that we should all know about. Now, Brazil is what we're going to talk about next on tonight's live. Another company decides to join the bandwagon of creating a crypto treasury or Bitcoin treasury to boost their stocks. Brazil's essentially Andre BTC joins Wave is what we're going to talk about next on tonight's live. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, go for inside the comment section. So let's see what's going inside the comment section first. I'm keeping great job, Miles. Thank you so much, Scott. I'm not an advisor, but I personally see only those in the close circle benefiting from this coin, or people sending untraceable money to Trump. Venezuela president is an absolute clown. I agree 100%. I agree. Let's go, Scott. Now, Brazil. A company out of Brazil, essentially Andro BTC, joins the wave of struggling crypto treasury firms turning to buybacks. The move is a part of a growing trend among debt companies, including ETH, Metaplanet, Squints, and Imperi Digital. Now, the first one obviously being MicroStrategy. But Brazil's largest Bitcoin treasury firm, Original BTC, has repurchased 99,600 of its own shares and announced it will delay additional Bitcoin purchases. The move essentially comes as it moves to bridge the gap between its market price and the net asset value, the NAV in other words, of its Bitcoin holdings. The company spent 1.12 million essentially reals, about 220,000 in a buyback operation. Origin BTC, which recently listed on Brazil's B3 exchange through a reverse merger with, essentially it holds roughly 3,708 Bitcoins worth roughly $409 million at current prices. It joins a growing essentially number of digital treasury essentially companies with large cryptocurrency holdings leaning on buybacks while their prices sit at discounted territories. ETH, for instance, recently sold $40 million in ETH to repurchase 600,000 shares on the $250 million of buyback plans, after its market to NAV ratio dropped to 0.62%. So a lot of these essentially companies that, were failing public companies that decided to, how they can prop up their stock is by creating a Bitcoin treasury and following Metaplanet and treasury, essentially MicroStrategy's footsteps, or creating an ETH essentially treasury to boost their stock prices on the public exchange. For some of them, it's not really working out at all. And that their holdings compared to their share prices just don't add up, which is making them sell their assets, which is their Bitcoin or Ethereum, to repurchase their own stocks, to boost their own stocks, so that it seems more appealing when investors want to come forward for them. Similarly, Tokyo-listed Metaplanet essentially committed 75 billion yen, around $500 million, towards buybacks funded by a Bitcoin-backed credit line after its MNAV essentially fell to 0.88. Sugins and Imperi Digital have also taken similar steps, moving BTC or expanding debt facilities to execute repurchases. Now, some of these firms have obviously borrowed against their Bitcoins or Ethereums, and some decide to just sell them just to buy back their own shares. Metaplanet shares are down somewhat 6% since the buyback was announced, while ETH's essentially shares are down more than 4%. Similarly, Sukin's shares dropped more than 20% since the buyback was announced, and while Imperi Digital saw an 8% decline. If we have downtrends inside the market space, these companies will get hurt quite bad. And if these companies decide to dump on the market space, then Bitcoin will get a massive dump as well. It will be a temporary dump. It wouldn't be a long-term dump, but it's not good either way. Again, it's because we don't have regulations. Origin BTC shares on Brazil's B3 exchange closed up 0.3% in yesterday's trading session, but overall down. Now, moving on from that to Go Dark is a new thing that's been introduced. And I want everyone to know about this, because nobody's talking about it inside the crypto space, or some maybe is talking about it inside the crypto space, but the majority haven't yet. So there's a new thing coming out called Go Dark, crypto's new institutional dark pool backed by Copper and GSR and many others. There is no real institutional dark pool in crypto, according to builder of Go Dark. Go Dark, an institutional dark pool, proposes as a purpose built for digital assets and backed by crypto custody and trading specialists like essentially Copper and GSR, unveiled a new service designed to execute large orders without tipping the hand to the market. As well as GSR and Copper, the offering comes out essentially at the gates with heavyweight backing in forms of users such as Front Financials, Stillman Digital, a company owned by DeFi Technologies Inc., Friends of Essentially Capital, Capital Union Bank, Tri essentially Capital, Hercule Volus, Trillion Digital. Over half of US equities trading volume is conducted in dark pools for a simple reason. If large institutions want to acquire or liquidate a potentially price-moving volume of certain assets, they don't want to tip their hand and spook the market. In other words, if large institutions want to dump on the market space, they want to do it silently. They don't want the news headlines coming out. This company moved essentially $100 million into a Coinbase exchange, because then everybody knows they're going to sell. And companies don't like that. Institutions love privacy when it comes to everything. So when they do want to dump on the market space, they want it to be silent. Yet, obviously, Arkham Intelligence will probably start figuring things out. It'll take them a bit of time, but slowly they'll start figuring things out. But they don't want essentially on X circulating. This company is essentially moving this much amount of crypto to Binance or Coinbase or Crypto.com. And everybody has an idea of they're about to be dumping on the market space, or they might not be dumping on the market space. They might just be holding it. So on that basis, Go Dark is basically a new feature. That's where dark pools come into play, balancing the liquidity available on centralized exchanges with privacy inherent in over-the-counter OTC transactions. Essentially, as it currently stands, that sort of infrastructure is an order of magnitude more sophisticated than which exists in crypto, said Dennis, the founder and CEO of Go Quant, the firm that built Go Dark servers. There is no real institutional dark pool in crypto. There is said in an interview. There are DEXs, which is decentralized exchanges. There are centralized exchanges. There are OTC DEX, but there is no real platform where you can trade off chain while getting the benefits of trading the actual underlying spot asset. The advantage of using CEX, which is fully transparent and could essentially move the market, is the large amount of liquidity. And OTC desk, meanwhile, is opaque with but limiting liquidity translates into marked up essentially spreads and high fees. Dark pools sit in between, offering the best of both worlds. Applying the dark pool concept to crypto is particularly relevant because of the high volatility of digital assets and the nature of distributed liquidity across essentially different crypto trading venues. There is added. Now, obviously, there are dark pools inside the crypto space. Dark pools existed inside the crypto space in the early days of Bitcoin because of what Bitcoin was used in the early days for. But some sort of centralized, regulated type of dark pool doesn't exist. GoQuant started essentially out as a market data provider for mid to high frequency crypto native funds. From there is a team created an end-to-end trading system that included market data and trade essentially execution with latency as a main essentially priority. As well as the GoDoc servers, there is recently essentially introduced GoCredit, a borrow/lend platform featuring a centralized matching interference designed to cater to banks, TradeFi, hedge funds, and similar businesses. GoDoc said it will offer spot cryptocurrency trading at launch and plans to expand into future contracts, conventional futures and options, and other instruments. In addition to ultra-low latency matching and non-custodial also essentially execution protections, including minimum fill sizes and options to require that order execute only if they match the best price available on various lit venues. Something akin to essentially respecting the national best bid and offer NBBO in the United States. I think it's interesting regarding, and it is obviously something that institutions will be highly interested in, to be fairly honest. They can obviously use dark pools now, but it's just about that trust situation when it comes to dark pools, which there's none whatsoever. There's no trust in the idea of using a dark pool whatsoever, unless you're, just a dodgy person. If you're not a dodgy person, you're not going to be using dark pools. But the idea of a dark pool that's a centralized, controlled environment is an interesting one, and it could be, where institutions would want to be hanging out from now on. Now, yesterday, I revealed to everyone regarding the XRP news of Canary Capital, where Canary Capital essentially filed in a new filing for essentially the S1 of an XRP ETF. Today we have an update about that, which is Carry Funds removes the SEC delay clause. Day one of the government shutdown, I revealed something to everybody that there is a law inside the United States that during a government shutdown, things still can pass through even if the SEC doesn't respond or doesn't do anything due to a government shutdown. And that it's never been done, but there is a loophole, legal loophole. It's not illegal. It's not so much of a major gray area because it's a loophole. It's a legal one where if institutions wanted, they could use that loophole to pass their ETFs through during this government shutdown, and the SEC can't do much about it until the government opens back up. And if the SEC disagrees, then something can be done. But then again, they would have to come up with a very good reason on why they're rejecting it. But yet it can pass through. So, and that's what I revealed day one when the government shutdown happened. I said, no one's done it so far, but it is a loophole. And it's a legal one. Carry Funds is moving forward with plans to launch their spot XRP ETF because they are essentially using that loophole. Regarding, essentially, after filing an updated S1 registration with the SEC, the new submission removes the delaying amendment, enabling essentially the ETF to automatically go effective under the 20-day rule if the NASDAQ grants approval of the related A8 filing. Carry Funds' updated filing limits the SEC's control over the timing of the approval, creating a possible automatic effectiveness window. If the SEC raises no objections, the ETF could go live by November 13th. We could be expecting an XRP ETF November 13th. NASDAQ's review of the 8A filing remains a key factor in the launch timeline. Market experts also noted that the launch schedule could essentially depend on the US government's reopening and the SEC's review speed. SEC Commissioner Paul S. Atkins recently expressed support for firms using the auto-effective route during the shutdown, calling it an important step to maintain progress for financial products. Even Paul Atkins is saying you could use this. Bloomberg senior ETF strategist Eric said the XRP filing involved less interactions with SEC than the Carry Solana ETF does. He described the company's approach as worth of a try, pointing out that the previous filings under the same framework had moved more effectively through essentially approval process. Investor interest in XRP-linked funds continues to grow. The REX, essentially XRP ETF, launched 6 weeks ago under a 40-act structure, has already surpassed $100 million in assets. Operating as an investment company rather than a commodity trust, the fund reflects strong demand for regulated exposure to XRP. Bitwise's chief investment officer Matt Huggins said an XRP ETF could attract more than $1 billion in inflows within its first few months. He stated that XRP investors community remains highly active and could support strong early trading activity once the ETF begins trading. The SEC is currently reviewing around 20 XRP ETF applications, slightly essentially behind Bitcoin and Solana with the other crypto projects as well. Now, applying this model to its XRP product, positioning it for potential November debut. So, could we really be expecting XRP essentially November 13th automatic approval? Probably yes, we could be. Because it's a legal loophole that could be used during a government shutdown. Because the SEC is understaffed, they could just use this legal loophole to get things rolling. They get things rolling. We could definitely expect liquidity coming into the XRP ETF from Canary's ETF. Because we saw tremendous amount of liquidity coming in through Rex's ETF, and that wasn't an actual proper ETF, but it is still an XRP ETF, and that had $100 million coming into it. And according to Bitwise, essentially CEO, we could be expecting essentially over $1 billion coming to XRP ETF once one actual XRP ETF is passed. So could we get XRP ETF November 13th? There's a possibility of a yes. And there is a legal loophole. I think November 13th will be XRP holders' happy day, is what Kali says. That's fantastic news. Let's go Stormy. On that basis, that we could be expecting an XRP ETF November 13th, which would be great because November 3rd to November 4th is the Ripple Swell event, which is huge names. And then after that, having a essentially XRP ETF would be a cherry on top. On that note, we have reached the endings also of tonight's live. This was episode 398 of the CMF Live. CMF stands for Crypto Miles Family. My name is Miles. You can tune this live Monday to Friday, 10 p.m. London time onwards. The most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Now, important information for all of you to know about. I might be going on some sort of a business trip Sunday, which is okay because we don't do live shows on Sundays anyways. It's Monday to Friday. But I might be coming, so I might be going on a business, somewhat of a business trip on Sunday, coming back on either, most likely Tuesday morning, I will be back. Latest, I will be back Tuesday morning, Tuesday afternoon, or so on. So I won't be able to do the live show on Monday because I'll be in Spain, but I'll be back in London on Tuesday. So Sunday leaving, Tuesday coming back. We'll have to skip the live show on Monday, but I'll definitely keep people updated if I am even going on this business trip, but I'll definitely keep people updated. And I'll definitely keep the CMF updated inside the live show, just in case all of you know why there's no live show on Monday. It's because I might be in Spain, and Tuesday I'll be back in London. But it's going to be a 1 day to 2 day scenario, and then one day, 2 day essentially thing, and then I'll be back. Thanks so much, Miles. That's just no problem. Night, Miles and CMF. Pablo, see you tomorrow. Pablo, see you after the trip in Spain, most likely. Brother, same timing as usual. What is your opinion about Pep Node? Have you heard about it? I haven't called. No, direct message. I'll take a look into it. Honestly, also, thank you so much to everybody who liked and retweeted this live show. Thank you so much to every single one of you CMF members who liked and retweeted this live show. If you haven't, like and retweet everyone. And Night, Miles and CMF. Pablo, Night, Stormy, thanks so much. Let's go. Have a wonderful business trip. Thank you so much, Stormy. Thank you, Miles. Mike, let's go, brother. And see you next week. Good night, CMF. Let's go, Stormy. See you next week. Funky brother. Good night, Miles. And good luck with your project and have a safe flight. Let's go. See you next week as well, Funky brother. Wishing you a successful meeting in Spain. Let's go, Susie. See you next week as well. Good night, CMF. Funky brother. See you next week as well. Same timing as usual. It's not confirmed yet, but we'll see. Thanks so much to every single one of you that tunes in Monday to Friday, 10 p.m., long time onwards. I love you all. The disclaimer of this live show, as always, is not financial advice, not political advice. Whatever I say is only for entertainment purposes. This was episode 398 of the CMF Live. Miles, thanks for your live shows. A big thanks. No, okay, we're here actually. Okay, they're going too fast. We're here. Good night, Miles, and good night, CMF. Let's go, Stormy. Good night, Miles, and good luck with your project. Have a safe one. Let's go. Wishing you a successful meeting in Spain. Let's go, Susie. Good night, CMF. Funky brother. Let's go. See you next week. Great live, Miles. Thank you. Have a good trip. Let's go, Jason. See you next week. Miles, thank you for your live shows. A big thanks for Mike Dell for his urged donation. Good night and see you after your business trip. Let's go, Carl. Oh, yeah, Mike, thank you so much for the donation as well. Absolutely amazing, brother. Thank you so much. Good night, Miles, and enjoy. Let's go, Callie. See you next week. Good night, Miles. Scott, let's go. Travel safely. Let's go, Scott. See you next week. Share the live, folks. Let's go, Scott. See you next week. Thanks, Miles. See you all next week. Let's go, Shelly. See you next week as well. Thank you very much, Miles and CMF Group. Have a great trip to Spain. I'll see you next week. Let's go, Carlos. See you next week as well. Love you, Miles. I wish you success with your meeting. Thanks so much, Scott. See you next week as well. Same timing as usual. I will see everybody same timing as usual next week, and I'll keep you all updated. Love you all. See you all next week, same time as usual, for episode 399 of the CMF Live. Sent you a message too. Scott, I'll definitely check it out. Sorry if I haven't by now. Love you all. See you then next week for episode 399 of the CMF Live. Like, follow, comment, subscribe, retweet if you already haven't. If you have, thank you so much. See you all next week. I've just tuned in. I missed it all, but I'll rewatch it. No problem. Lena, good to see you as well. Apologies, no problem. Mike, let's go. See everybody next week. Have a great weekend, everyone. Good night. Let's go, Scott.